US data releases remain disrupted as opinions on US rate cuts diverge. Australia's unemployment rate falls after strong jobs growth, and New Zealand's recovering labour market is supporting a migration turnaround. That's coming up in our 5 Things in 5 Minutes on Friday, November the 14th. And then in our deep dive interview, ANZ Economist Maddy Dunk looks at where the hotspots are for lending to Australian housing investors.
If you look at the share of new loans that are going to investors, that's more than 40% in most states.
But first, in 5 and 5 with ANZ, markets wobbled overnight as traders look at how to assess the underlying state of the US economy amid a data blackout because of the shutdown, even though it's over. There was an indication yesterday from the White House that October labour market and CPI data would not be produced, although National Economic Council Director Kevin Hastert said overnight jobs figures will come out next week, but without the unemployment measure. ANZ economist Bansi Madhavani says that places reliance on private sector data when assessing what the Fed will do next.
For our thinking around the upcoming FOMC meeting in December, look, the available data both on inflation and employment front support our view that the Fed will cut policy rate at its December meeting. On the inflation front, our assessment is that underlying disinflation trend is intact, and we are expecting the impact of tariffs on inflation to prove transitory. The available employment data shows that hiring momentum in the economy has been particularly weak, and that poses upside risks to the unemployment rate.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was down 1.3% and the Nasdaq down 1.9%. The yield on the US 10-year Treasury rose 2.1 basis points to 4.084%. West Texas oil futures were up 0.7% to $58.91 US a barrel. Gold was down 0.3% at $4,200 US an ounce. The US dollar index was down 0.4%. The Aussie dollar up 0.2% at 65.51 US cents, and the Kiwi was flat at 56.72 US cents. Number 2. Bunsie says there's a growing divergence of opinion on what the FOMC will do next, which introduces some risk.
Uncertainty around a December rate cut view is quite high. Going into 2026, though, we think that the FOMC will move in a more gradual manner. Our forecast is that the FOMC will stagger rate cuts next year, easing by 25 basis points in both Q1 and Q2, instead of delivering successive cuts in the first quarter itself.
Australia's unemployment rate fell back more than expected to 4.3% in October from 4.5%. That came as employment increased by 42,000. ANZ economist Aaron Luck says that was double the market expectation.
It looks like the unexpected increase in the unemployment rate to 4.5% in September, that might have been caused by some noise in the data. I say that because most of that increase was actually driven by just youth unemployment, which typically is a bit volatile. So the youth unemployment rate rose from 9.6% in August to 10.6% in September, but in October we saw that increase completely reversed, and as a result the total unemployment rate also came down to 4.3%, which is what we saw back in August.
Number 4. Aaron says the data will reinforce the Reserve Bank of Australia's view that the labour market is tight.
Hours worked is up 0.5% as well. That's the second consecutive monthly increase. Underemployment also declined to a very low 5.7% as well. So look, from the RBA's perspective, today's results probably reinforce the thinking that the labour market is still a bit too tight. And based off where we landed with inflation in Q3, I think we can still expect the RBA to hold the cash rate unchanged in December. But that said, we still expect the RBA to cut the cash rate one more time next year, which would take the cash rate down to 3.35%.
Number 5. New Zealand's seasonally adjusted net migration was 1,800 in September, up slightly from August and above the monthly average of the last year. ANZ senior economist Matt Galt says net migration doesn't look to be dropping anymore.
It's potentially starting to increase, although picking turning points in net migration can be difficult. But what we are seeing in the broader labour market is improvements in indicators like job ads and monthly jobs filled. So as the labour market starts to improve, we'd expect to see net migration gradually start to trend up.
Matt Galt there. Now, in our deep dive interview, ANZ economist Maddy Dunk looks at where the hotspots are for lending to Australian housing investors after a 14% rise in the number of investor loans in the third quarter.
If you look at the share of new loans that are going to investors, that's more than 40% in most states. So in South Australia, Queensland, WA, New South Wales and the Northern Territory, we're seeing more than 40% of new loans are going to investors. In the Northern Territory, it's about 50%. So very high right now, and that probably goes to the strength that we've seen in Northern Territory housing prices. Darwin prices up about 15% so far this year. And we've seen this big acceleration in the Darwin housing market.
What's behind that demand from investors? Are there any fundamental factors or settings from the RBA or regulators?
Generally, we see that investors are more sensitive to interest rates. So the RBA's easing cycle has clearly helped investors and prompted investors to get back into the market. We generally see that New South Wales, Victoria tend to benefit in easing cycles more than some of the other states because there is that increased investor activity in those states. And if I just look at the Q3 data, we saw that the number of loans in New South Wales and Victoria for investors were up about 19%, so very strong and outpaced the other states and territories.
And what are we seeing from owner-occupiers around what they think of the RBA and whether we'll get rate cuts?
Bit softer on the owner-occupier side. We still saw strength, but nowhere near the strength that we saw in the investor activity. So, for example, the value of owner-occupier lending was up almost 5% in the quarter. And if I actually break that down into first home buyer and non-first home buyers, what we can see is more of the strength is coming on the non-first home buyer side. So I think that goes to the affordability story. We know it's incredibly challenging for people to get into the market given the extent that prices have risen over recent years. And if you look at the number of first home buyer loans in the quarter, it only grew 0.9%, so pretty soft.
What's going to drive the Australian housing market from here into next year?
Well, it'll be quite interesting because we've had that expanded first home buyer scheme that started in October, and you would expect that should support activity amongst first home buyers. So while the fact that the RBA might take a more cautious approach to easing may temper activity amongst investors, on the flip side, we might see this new group of people come into the market given there is more opportunities to get in given we do have that expanded scheme at the moment. So I think that will support housing lending in the last quarter of this year.
Maddy Dunk there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, November the 14th. Catch you next week with a review of Chinese October retail sales out today and a look ahead to the Reserve Bank of Australia's meeting minutes out on Tuesday. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.